Hey guys, in today's video we're going to do our best to explain what a stock is. So you hear about people investing and you just don't quite understand how it works or what it is. Maybe you already invest in something else, but maybe you already invest in stocks, but you're really not sure what you're getting into. So hopefully we answer those questions today. And if you have anything else, like always, unanswered or questions about any other process, please comment it. I'll be more than happy to explain it in another video or attach to your comment. But to start off, like always, I'm not your financial advisor, and this is not financial advice. Let's get into it. So stock. Stock is partial ownership of a company. It's a security that represents partial ownership of a company. When you buy shares of a stock, you purchase a small part of the business, which grants you proportional claim on the company's assets and earnings. They also give you voting rights on big decisions in the company. But let's break that down into an easy analogy. Let's take Steve, right? How is a stock born? We'll start from the beginning. We have a guy named Steve. Steve wants to open his own bakery, right? So he opens up his own bakery. He's doing good. Steve owns 100% of his own bakery, right? Makes pies. Hence a pie chart. I thought it was funny. Anyways, Steve's doing really good. He wants to expand. He needs $5,000 for a new oven, right? But he's doing good. He's like, oh, I could save up for it. Or his friend Jessica offers, hey, Steve, I'll give you $5,000 for a new oven if I get 50% of your business, right? Steve owns 50%, Jessica owns 50%. Forgive my handwriting, I know it's atrocious. Everybody types nowadays anyways. So, she paid $5,000, right? $5,000 for 50%. Time goes on, doing well. Jessica's bragging that, oh, I own part of this great bakery downtown, does lots of pies. Thanksgiving, it's huge. Talking to her friend Richard. Richard is like, well, I want some of that. And Jessica's like, well, it's doing really good. I'll sell you 50% of my share of it for $8,000. So Jessica's portion is cut in half. Because Richard bought some. He paid $8,000 for 25%, which is 50% of Jessica's. So now we have these are the three shareholders, a part of his bakery, which is now their bakery. What do you guys want to call it? Steve's Pies. Call it Best Pies. SBP. Steve's Best Pies. So all of them are shareholders for SBP, right? Now originally, we'll say Steve only put $2,000 originally to get it started, right? So originally the whole business was worth $2,000. So their shares originally, so 25% would all be $500. But since the last price went through for 25% at $8,000, technically Richard's is worth $8,000. Jessica's worth $8,000. Steve's worth $16,000. because he's double theirs, right? Catching on? So Richard can go ahead and say, hey, it's been a little while, it's doing good, I want my return back. He wants to sell his shares to somebody else. We'll say he wants to sell it to, what's a letter we haven't used yet? Zach. We're going to do K. Wants to sell it to Zach. Now, Richard wants $12,000 for his 25%. So he's asking however, Zach says, I don't want to pay that. I'll put in, like, I'll do 10,000. So this is where we get the breakdown on a stock. Okay. So when you see the price of a stock, you'll see, we'll take, for example, Disney. Disney is currently worth, we'll say, $100 a share. You'll see bid and ask on Disney. So last price is $100. That's the value of the stock currently. That's what the stock goes for. Bid on it is what the person who wants to buy it at. They want to buy it for $99.98. They want their 2-cent save. Where the person selling it, ask, wants it at $100 and 2 cents. It's a much smaller spread compared to Zach bidding 10,000. Even though he's asking for 10,000, it's still considered the bid in this case. And Richard asking for 12,000. Okay? So this is how we get those numbers, understanding a stock. Going back to the pie chart, Richard can end up selling less than that. Say he sells 10% out of his 25%. So he's down to 15. Zach's at 10. So this gets cut again. We have Zach. You see how more people start owning it? They eventually IPO, which is the initial public offering, goes to the open market. This is your shares. So these are just like when you buy a share of a company, except instead of 3 owners, 4 owners, there's a heck of a lot of us. Hundreds of thousands of owners in these companies. So here we have 4 shares, right? They're not equal shares, so we broke it down to 100. You know, Steve would own 50 of them, 50 shares. Jessica would own 25 shares. Richard 15. And Zach 10. Right? It's 100 shares. So Disney, we're going to take, and it's DIS, by the way, because it's not short for Disney. I mean, technically it is, but that's the ticker. So any company on the open market has a ticker. Most of the time it relates to their name, just because it's easy. But like Disney is DIS. Coca-Cola is KO. It's just what you search with your broker to go search that security up so you can see what it is. If you don't know what the ticker is and you want to find the company, you can always Google it, Yahoo Finance, anything like that to find the ticker, or even type in the full name to your broker to pull it up. But we'll get into actually buying the security later and setting up a broker account in a later video. Like I said, if I'm going too fast or I'm skipping over some questions here, feel free to drop it in the comments. I will happily explain in detail in more layman terms. But That's how you get your bid and your ask on your stock, right? These are all shareholders that make up the stock. This is how the price changes on the stock. That's what a stock is. That's everything that makes up a stock. Now, if Steve is like, hey, I want to sell the business, the whole business. I want to have a meeting with Jessica because she owns the other half. Well, she doesn't own the other half. There's more shareholders now. All of them would meet and vote. And like the stock market, they get proportional votes. So out of 100, Steve gets 50 votes. He has 50 shares out of 100. Jessica gets 25 votes. Richard gets 15. Zach gets 10. So if I buy 1 share of Disney and they have a voting thing that goes out, which they do. So like new board member, they want to raise pay for the board members. They want to acquire a new company or something. Whatever it is. They want a new chairman. They'll actually email you with a proxy vote and you can vote yes or no, and it's per share. So if I have 100 shares of Disney, I get 100 votes. Now you're like, oh, that might be a lot. Depending on the company, yes. Other companies, no. So we said, for this company, it's out of 100 shares. How many shares does Disney have? Let's give me a second here. Disney has 1,785,288. I'm so sorry. 1,785,288,846 shares. Is your one vote gonna do a lot? I mean, you still vote in the election, right? It's one vote. So, yes and no. If everybody else votes with you, yeah. So, 1 out of 1.7 compared to 1 out of 100 exponentially means more. Not all companies have this many outstanding. Just an example. Disney's obviously a very large company. Getting into that, you're probably like, well, what's the point of me buying besides it going up and down, right? Maybe you believe in the company, you think it's going to go up. So more people buying the stock, greater demand for it, makes it go up. So we talked about this spread before, right? Richard wanted $12,000 for his shares. Zach wanted to pay him $10,000. If more people wanted it, suddenly they have to outbid each other. So it's not 10,000. Oh, it's 10,100, 10,200. Price starts going up. Maybe he sells more shares. Greater demand on this side makes it go up. Now, if not just Zach was selling his share, not just Richard was selling his shares, but Jessica and Steve were also selling, and only Zach's buying, well, Zach has a better deal on his end for, oh, I have more sellers? Well, okay, I can lower the price. I'm not going to pay $10,000, I'll pay $9,500. Who's going to accept it? Price lowers. Supply and demand. That's how it raises up and down. Just like anything else. But that's where you get the bid and ask. More ask, price goes down. More bids, price goes up. Yeah. Pretty much all that's to it. But your question earlier, why would you buy a stock besides it going up and down? Because you can lose it all, right? Some stocks pay out a dividend. So some are greater than others, some don't pay out any. Tesla. Yeah, that's the ticker for Tesla. That's an A, by the way. Awful day. They're like $420 a share. Nice. They do not pay a dividend. $4.20. A dividend is something that can pay out once a year, quarterly, every month. It is a part of the proceeds that the company makes, so part of their profit that they give back to their shareholders. So you make something back for just holding the stock. Doesn't cost you anything. You have one share of Disney. I think they pay out semi-annually, so twice a year. I think it's like 90 cents. I think. Don't quote me on that. So just for owning one share of Disney, so you paid $100. Every 6 months, they're going to pay you 90 cents into your account every 6 months just for holding it. The stock can go up to 110, can go down to 90. It's still 90 cents. Unless they end up changing it. Now you're like, well, I have a vote if they change it. That's the one thing they won't ask you, is if you increase or decrease your dividend, because it's everybody's going to want more dividend, right? Now other companies pay out nicer. Verizon, for example, is only like $40 a share. And their dividend, I think, is $2 a year? I don't know. Something like that. So, and they pay quarterly. So every 3 months, right? They're going to pay you 50 cents. And you're like, well, it's $40. Why wouldn't I just buy more Verizon compared to Disney? It's your preference. Maybe you're a huge Disney fanatic. You love Disney. You want to own a part of Disney. That's part of it. Right? So, telling you what stock to buy, I can't tell you what stock to buy, unfortunately. To start out with, I would suggest a blue chip stock. And when I say blue chip, I mean, the definition of blue chip basically is a stock that's so big that you can't imagine it failing. Because any stock can technically go to zero, right? Company can go bankrupt. You have one share, you have 1,000 shares, you lose it. Money's gone. Blue chip, can you imagine Disney going to zero? You imagine Disney disappearing like that? No. Disney's the perfect example of a blue chip. Microsoft, Verizon, things that are always around and you think are always going to be around. It's a blue chip. Your first stock, I would suggest a company you like. That's a blue chip. That pays a dividend, even if it's, 1 cent. It's something. And I say that just to build your portfolio, and some people might not agree with this, which is fine. If you go through its time spans where you do not put money into your broker account to grow it, economy's doing awful, all your stocks are down, we crashed, whatever, companies still pay dividends most of the time. So even though you're not adding money to that account and it's not growing because there's no growth in the economy, you still get money to play with every quarter when they pay you your dividend. So it might take 90 cents. It takes a while, except that's per share. So if I have 100 shares, it's $9. I'm so sorry. That math was incorrect. $90 for 100 shares. We'll do a quick little calculator here to show you I was wrong. Alright. 0.9 times 10. So 10 shares is $9. 100 shares is $90. It is late. I worked all day. My math's not going to be all there. I do math all day for my job. Because I do stuff like this at work all day. Unfortunately. But yeah, so that's per share. So as you expand your portfolio, say you have 10 shares of Verizon, a share of Disney, you're slowly going to see growth in the account. And if you're like, well, 50 cents for $40, dude, that's nothing. That's not. What are you talking about? I'm sorry, you have $1,000 in your savings account at the bank and it's making you 12 cents a month? This is $40. It's equaling the same yearly return. Right? I'm just saying. Stocks are. But the bank account doesn't go down, and well, yeah, this has room for growth. It's a blue chip. Anyways, guys, I hope that explains what a stock is to you. Basic understanding of it. It's a security that represents market share of a company. But yeah, like I said, if you guys have more questions, please comment. If you want to need advice on any other item, I'll be adding more videos. How to set up a broker account, which broker to go with, difference between 401k, IRA, Roth IRA, whatever you guys need in advice. I am making these videos strictly for learning. I will try to put them in more layman terms so anybody can understand. I can't give specific advice on what to invest in. I can just explain them so you can make that decision. And if you don't like how I explained it, please let me know and I will explain it better to the best of my ability. But yeah, don't forget Joe's Dough before you invest. You guys have a great night. Enjoy the holiday.